Afternoon, and thank you for tuning in to Moneycontrol. I'm Karunya and I'm finally here back in the Mumbai newsroom with Manisha Gupta.
After a big vacation?
Yes, guilty. So we're here to get you an update on what's happening in the commodity space, and metals seem to be hogging all the limelight. What exactly has China said in terms of stimulus, and how big a boost is it for metals?
You know, Karunya, China has done 33 stimulus measures in last 1 month, but clearly none of them seems to be working out, because what they're trying to do is that they're trying to rein in or plug in the impact of COVID restrictions and lockdowns on many of these industries. But remember, these industries also are looking at weak economic data. We have war impact coming in as well, and then these higher prices also finally seem to have led some demand destruction. There have been reports on how processors and metal traders within China are now trying to sell physical metal because there's no demand. So that really is concerning. But that's the kind of data that we've seen come in from China in last couple of months. So well, yes, while China has done, but has China done enough is a question mark that many of the traders and analysts are asking.
Clearly. But what is the quantum of fall that we're looking at across the key metals?
So the month of May clearly has not been kind. If you look at aluminium is down 1.5%, but the major decline clearly has come in for zinc, down 4.5%. You have nickel down by 13%. Steel is down 13%. Iron ore is down 4.5%. So well, yes, there is no metal or mineral at all which is in the positive for the month of May. And June hasn't started on a very positive note yet. Again, yes, markets do tell you that we've declined quite a bit. Inventories are declining. At these lower levels, there is some stocking that has started to happen. And as China gets into its grill and there's manufacturing which starts on a positive note, you will see metals start coming back. You know, until now it has been quite a decoupling. You have crude prices continuing to rise, but the rest of the metals haven't done so much. So now the expectation is that crude will consolidate or go higher, and metals will slowly start to catch up.
Okay. So is this a good time perhaps to buy, or is demand still a huge concern, and are people wary of buying at these levels?
So markets do want to see those numbers come in again, because April and May, the economic data from Europe, from China, from US also for that matter, has been on the weaker side. So the markets do want to look at that number. They want to see demand coming back because before they want to start buying. But even within this market, it is about the inventories which have seen an increase, which deters people into buying. Yes, there is stocking on the lower levels right now, but are there too many buyers right now? If you look at the CFTC data in the international market, it does show you that there are more shorts than longs being created into the space, and shorts as high as 2-year highs. So well, yes, there is very less encouragement or impetus to buy right now.
What's happening with precious metals? Are they following suit?
They totally are, yes. You know, even as we are holding around $1850 per ounce, but the month of May has seen 2% of decline in gold prices, 4.5% of decline in silver as well. So yes, even if it is precious metals, we have seen a constant decline on that. And June, even as it is started, markets will wait out for the US non-farm payroll data on Friday. It still is next heavy data, because you have Fed officials speaking, you have inflation numbers coming. So there is just so much to react to even in the near future.
How has our domestic numbers been? The GDP numbers came out yesterday. What is the demand like here? Demand and of course activity.
So that's interesting, because when you look at the overall number, when you look at Asian demand, Chinese demand, Indian demand incrementally is showing a growth here. Even for the crude demand, last year per average was 4.77 million barrels per day of an intraday demand. This time around is 5.04. So we definitely are looking at higher demand. Same goes when you look at steel, when you look at other metals, the imports, the usage has been quite steady, and the market's clearly leaning on that one.
Okay, so we'll leave you to that. There's lots to digest when it comes to metals across the board. There has been a fair amount of correction, if I may call it that. I don't know if we can call it that yet, but definitely some weakness that persists across the board, and that's all we have in today's edition. Thank you for tuning in.